What's up, guys? This is going to be a very quick video on my simple scaling system for trading options. So let's say we're taking a look at the S&P 500 right here, and I have some analysis. It's around 1:30 in the afternoon. We already saw some price action throughout the day, which is the first step. Especially if I'm trying to scale in or out of a position, I need levels to look at on low time frames to do just that. So I have my data, I have my levels. Let's say I'm seeing this wedge form. I'm taking a look at these lows from the morning around 10 o'clock a.m. And I see that's coming into that support. You've got a wedge forming, maybe some hidden bullish divergence. Let's just say some good news came out and I'm looking to get into calls here, right? So for an example, let's say these are SPX contracts and they're $500 a contract for the calls. And theoretically, I'm comfortable with trading 5 of those contracts. So my intended position size will be around $2,500. 5 contracts times $500 a contract, right? So right now, this is where I'm thinking, okay, my intended position size is $2,500, and in the first place, that $2,500 should be fully riskable. So let's say you have $100,000 in your account, hypothetically, and you're willing to risk, and this is actually a high amount, but I'm just doing examples here, you're willing to risk 2.5% of that $100,000 on this singular trade. Now, 2.5% on one trade, especially on something like CRDTs, is very high, but I'm just using these as examples here. Typically, for me, like, it should be smaller than that. If it's a smaller account, maybe it's larger than that. If I were trading with a $100,000 account, in this scenario, it would probably be like risking like 1%, which would be 1,000. But let's stick to the scenario. I'm not going to confuse all of you with all these numbers. Position size, $2,500, okay? And that's 5 contracts. So right now, this is where I'm looking to get in. So I put in my first contract. Price is kind of moving the same. I get another contract. So now I'm sitting in around 2 contracts, okay? Let's hit the play button here. Oh, we just went down. Okay, so let's say right when we hit the lows there, I filled in on another contract. And now I'm like, okay, we're testing this breakout. We're testing the VWAP breakout too. Everything here, my game plan is still there. We're above the support. We actually bounced right off of it. Now we're even testing a breakout. I'm going to do 4 contracts already here. Maybe for that last contract for me to go full position size, something I would like to see would be like a breakout and a back test. So let's let this price action unfold a little bit more. No breakout or back test yet. Really nothing clean in terms of a back test. Now you're back in the wedge. Still really, this would potentially right here be the first area where I would take some profits, right? Same thing. I'm looking at levels on my chart. You just went back up to the top of this range right here. So you went up to the top of this range. I'm like, okay, let me take half my position size off the table. Because at that point, let's say your contracts just went up 30, 40%, and you're already in on 4 contracts, right? And that's $500 a contract. So, you're making some profit here. I'm going to take half my position size off the table for this trade, okay? So I'm going to sell 2. I have 2 contracts left right now. And let's see, now I'm going to watch to see whether or not there's a breakout test. At this point, what I would be doing is raising my stops for the other 2 contracts, not even just to break even, but actually slightly in profit. So let's say I did that hypothetically. We take a look at the price. Ooh, it wasn't able to break the resistance, right? So now we're selling back off again, and here we go. This scenario, I don't know exactly what the fills would have been in this scenario. Maybe they could have gotten stop hunted for in profit, and the trade could just be over, where I took a slight profit on the last 2 contracts right here, and I sold quite literally the top on the first 2 contracts. But let's say you didn't have that fill, and you were still in your 2 contracts, right? So you still have your 2 contracts left, okay? Your stop is there, it still hasn't hit it. Oh, there we go, back up. Now we're testing again. And there we go. Right here, you finally get your breakout. So on that breakout candle, immediately, I would definitely take some profits right there. So now I only have what's known as your runner left. 1 contract left. I was able to average out in this scenario, and hopefully you didn't get stop hunted there. But even if you did, it's a profitable trade, right? And you prevented yourself from, let's say, what if it broke that support, seeing a loss. So there would be that contract taking some profit. Looking at the price again here, you're going for the retest. You got a successful retest. Maybe if it would have broken under that level, I would have just gotten fully out. But you flipped the previous resistance into a support. Okay. Price action still developing. Some fresh highs here. Retesting again. Retesting again. Let's see. Oh, will it break it? Will it hold it? It holds it. And there you go. At that point, you're going back under your range, and that would be it. So that would pretty much be, where I would have that final sell. And this is like the most realistic scenario for my scaling system. So you can see the majority of my buys took place around where I was watching the price action, and my sells took place in multiple different areas, right? And that's really what my scaling system is. It's using a lot of ins and outs, price levels, and that's like a real replay of how I would have looked at it to get an averaged out higher price of average profit. And if this didn't work out, my stop loss would have been extremely tight, especially for a trade like this, quite literally right below these lows here at 52.48. So that's a great example of the correct way to scale out. And I hope that helped. Before we talk more about options in my risk management strategies, I want to give a quick shout out to this video sponsor, Public. Public recently launched options trading on their platform. It is easy to sign up, and trading options on Public is commission-free. There are no per contract fees. They have an options hub where you can explore actively traded options and so much more. What makes Public different is that they're actually sharing 50% of their options revenue with you, meaning you get an 18-cent rebate back for each contract you trade. This 18 cents is expiring March 31st. So make sure you sign up by clicking the link in the video description and activating options trading on Public before March 31st, 2024 to lock in your lifetime rebate. Now back to the video. Now let's go over an example of scaling out of a losing trade, because it would be one thing for me to talk about how to scale out of winners. Oh, that's so easy, especially when we're looking at them in hindsight. Let's talk about losers. Not every trade is going to be a winner. In this example, honestly, it's not great. I don't even personally view this as like a good long opportunity. I'm just kind of doing this for the sake of the video. But let's say I had some sort of analysis that made me feel like going long and buying calls here on the SPX. We're going to use the same type of rubrics as the first scenario. Let's call it 5 contracts. So let's say my stop is, somewhere around like right under this low of the day. I saw that we gapped up, and let's say I thought we were going to break above this 52.34 resistance and get above this gap fill level. And that's just what I thought for whatever reason. So, I'm not as confident in this trade. So I start off small. I'm going to start off with just one contract. So I buy 1 out of the 5 contracts for my intended position size. Hit the play button here. And then we immediately go lower, right? But it seems like a stop punt. And I didn't even place my physical order yet. And a lot of the times when I'm right into a trade, I wait a couple of minutes before placing the physical order. But I do have my hand like right over the sell button just in case I need to, just because stop punts like that happen. So I see the stop punt, and I'm like, okay, we actually got back above it. Let me get another contract. All right. So here we go. We're still kind of flirting with that level. Okay, I'm seeing this. Okay, now we're talking. You're going for the VWAP breakout test. I think about getting another contract. So I'm in 3 contracts out of my 5, which is my max position size. And we're still kind of messing with that, getting towards the top of the range, but I'm not really seeing anything change that's making me stay more bullish. Kind of just the same thing. And I'm just staying at my 3 contracts because we're just chopping now. And there we go. Now we're going for the breakout test. But just in case this is a top at resistance, I don't want to just go and get another contract. I'd rather be filling towards the support, right? So I'm just going to keep on waiting. Oh, yeah, didn't fill there. Good thing. Now we're going back down. And okay, we're testing this one more time. We bounced off this level the last 2 times. I'm going to buy another contract. 4 out of 5 contracts filled. And now I'm looking for the breakout, but guess what happens? Oh no, we're actually going lower and lower. And this right here is the first key, okay? These candles, you're still technically closing just above your support. The trade hasn't really changed. I mean, at this point, theta would really start to be eating at your contracts, which is something I would also take into account. But this candle right here, it looks like you're pretty much going to be closing your 5-minute candle under the support. And when you do that, you can quickly get a drop, especially when you have a downside gap to fill. So right over here, I would probably scale out half of my position size because I have just lost about half my confidence in this trade. So we see what happens next. We go lower, a little bit lower. Now we're still testing it, okay? Oh, but we did it one more time. Not once, but twice. You even gave it a chance. I am fully out of the position here. And this is technically very similar to the same price I entered. But what changed? My whole entire analysis. First of all, this wasn't even a strong trade in the first place. Second of all, we just confirmed 2 5-minute closes below my key support level, and that is it. My trade's invalidated. The data has already eaten out my contracts. Even though it's relatively the same price, it could be down 20-30% if they're short-term contracts. And I'm just going to take my loss there and go look for a better trade, okay? And that's a really key thing to remember. There's always other fish in the sea. And then if we look at what happens next, Well, you stopped out as kind of just doing the same thing again and again. But then we see that at that point, you would have been down quite a bit on those lows. And now you're flipping that support into a resistance. And maybe it's even now starting to look like a short setup potentially. And we can see that, there's really nothing telling us to get back into that trade. It's even looking more like a short now. And then we start to flip that support into a resistance. And what happens next, I think, is pretty obvious. That's obviously why I'm doing this replay. And you see that the market continues to drop. So to prevent being in for a move like this, it's really important to know when it is time to just move on. So hopefully the winner situation and the loser situation kind of gives you some education on both sides. I want to keep this video short and simple. Obviously things get a lot more complex. So make sure you watch the rest of my course. And I want to give a quick shout out again to the sponsor of today's video, Public. Tonight, March 31st, is actually the final day you can lock in your lifetime rebate. So make sure you sign up for Public and activate options trading by March 31st to lock in that lifetime rebate. Sign up by using the link in the video description, or you can go to public.com/championvibe. Hit the like button, hit the subscribe button. I hope you're enjoying these new educational videos, and have a great week in the market, everybody.